This conference will now be recorded.
Krishna, I'm already recording, so even if you don't record, that is fine.
Okay, sir.
Okay, let me check this. Where exactly this is maintained, I'm not sure at this point of time, but yes, this can be defaulted and this can be different for different item categories. So maybe in tomorrow's session, I will confirm on this, where exactly this is maintained. Okay, any questions till now? Okay, now let me, yes, Ramakrishna.
No, I was disconnected suddenly for the last 5 minutes. So, if we have some time, then we can put the configuration, or I can see the recording there.
Okay, no problem, no problem. I was just showing the configuration. Ramakrishna, just mute yourself, please. There is some background noise. Yeah. So your question, from where exactly in the configuration this Z3 and Z4 is maintained, I'm not able to see in this configurations that we have seen till now, but I will come back to you on this tomorrow. But I was just explaining the configuration that we already seen in our last session, which means if I want to, first I shown you this one, yes. So based on the item category, how system is able to know whether this is relevant to revenue recognition or not, that is maintained here. And second, this is a place where we are maintaining whether this particular item category is relevant for billing plan or not. Okay, so only these two I explained in the meantime when you were getting some network issues. So yes, so we are just left with understanding where this Z3 is coming from. So I'll explain you tomorrow. Yes, Lokesh, any question?
Yeah, Gaurav, what do you mean by the start date and end date 02 and 09? Is there any specific logic is behind on this?
You are saying this one?
Yeah.
Yeah, so question is from where this start date has been determined. Okay, how system has determined that my billing will start from 1st of July 2012 and it will end at 30th June 2013. So this can be either manually entered, okay, or it can be picked automatically from the contract. So you can see here, whenever we created the contract at the header level, we mentioned these dates, that the contract is starting from this date and ending at this date. And if we want the same to be copied into our billing plan, then we are going with this option. So you can see 02 means it is taking the contract start date and 09 means it is taking the contract end dates, which means the values in the start date and end date are coming from contract data.
Um, Gaurav, for this Z3, can you press F1 so that we can go from configuration from F1? Try to
Yes,
go
F4 or F1?
F1, F1.
Okay. Yes.
Can we go to this?
No, configuration is not available from here. So that's exactly what I said you. There is a configuration, but
No, no.
instead of
From here we can go, I think. Go to X3, Z3 F1.
F1 again. Okay.
Yeah. 3, 4, 5, 6, 7th icon. 7th icon. No.
4, 5, 6, 7. This one, customizing. Determining dates,
Yeah.
purchasing, sales, billing.
Yeah.
Okay.
Yes. Yes.
And rule.
Yeah. You can come down.
Okay, Q1 and yeah, Z3 and Z4.
Double click.
No, but this is where you maintain what will happen. But how this Z3 is determined, whether it will be
Oh,
Z3 or
automatic.
Z4. Yeah, that will come in the item category, right? That will come
Yeah,
in the
that
settings
will
of
be
the item
assigned the
category.
item category. Yeah, if you
Yes,
want
exactly. So,
automatically, there will be assignment of item. Maybe assign billing plan.
okay, let's see here. So item category WVN. Okay,
Yes.
this is only showing the information that we already know, but Z3 and Z4 is still not available here. Uh, Date categories, let's see. I'll see this last one, otherwise I'll come
Yeah,
with a
yeah, no
firm
problem.
answer tomorrow. Yeah. So billing plan type we are using as second one. No, even not here. Okay, I'll come back to
Okay.
you on that. Let me just come out of this now. Okay, so let's go to the next scenario now. I'll enter the fifth scenario here, and then we are ready for understanding what are the challenges in the current SAP SD revenue recognition functionality, because of which there are some new rules created from IFRS 15, and these new rules, why they are not uh, compatible with the existing SD revenue recognition functionality, because of which SAP came up with SAP RAR. Okay, so let's talk about the fifth scenario first. Now, whatever scenarios we have seen till now, they were all related to the periodic revenue recognition, right? So we created the contract is valid for 1 year, and then we distributed the equal amount over the periods, okay, over the 12 periods. But now let's say it is not periodic. It depends upon percentage completion. If you remember, I told you earlier also, percentage completion method. Okay, so which means the contract is created. Okay, but it is not necessary that every monthly we will be booking the same amount. It depends upon how much work we completed. Okay, so it may happen that you are booking the revenue of 10% in the first month. In the second month, it is only 6%. In the third month, again, you catch up the speed and you are recognizing 15%. So it depends upon how much work you are completing for a particular project. Okay, and normally this percentage completion method is tightly integrated with project systems. Okay, so you must be knowing there is a module in SAP called as project systems. So what you do is whenever, let's take an example, it will be better. So let's say you got a project in which you need to uh, complete the construction of the building. Okay, and you realized that the plan time for this construction will be 1 year. Okay, and at the end of 1 year, you are expecting that this building will be completed. So in order to book the revenue for the uh, for this particular construction, every monthly you will check how much percentage of building construction has been completed. So let me enter these values here. So let's say at the end of month 1 you completed, if I exactly divide this amount, so which will come to 100 divided by, let's say you are able to complete in 10 months instead of 12 months, 10 months. So it will be easier for us to calculate. So there are M1, M2, M3, M4, 5. Let me copy this. So 6, 7, 8, 9, and 10. Okay, so at the end of every month, you realized that only 8% was completed. At the end of second month, 11%. So consolidated or cumulative is 19%. At the end of, let me enter the cumulative. So 19, here you completed 25, here you completed 38, 42, 50, 63, 78, 91, and finally 10th month you completed entire 100%. So what will happen is, in this particular case, revenue will be recognized, and normally if I go with percentage completion method, even billing is monthly, and billing is dependent upon the revenue recognized. Okay, which means based on how much percentage you completed, first you will recognize the revenue, which means you will book revenue credit and unbilled receivables account debit, and immediately you will create a billing to the customer for the completed percentage, which means immediately unbilled receivables will be cleared and the actual customer account will be debited. Okay, so it depends upon the billing cycle, forget about that, but this is important. So the question is, in case of periodic, system was automatically calculating how much should be the revenue for each month, because it was just the calculation divided by 12. But here, how the system will know that how much work you actually completed? In order for system to know how much work is completed, you need to have some setup in project system. Normally we use project system. Okay, so we will create a project in the project system module, and based on whatever activities you completed in the project, system will automatically fetch the data from project system into SD, and it will know, okay, whether the 8% has been completed or 19% has been completed. And this transfer of data from PS to SD is done via result key. Okay, so what is the purpose of result key? To calculate the percentage completion. And how this result key work, you can define your logics. Okay, so I'll give you two examples. How system will know whether it is 8% or 19%? It can be based on planned cost. Okay, I'll give you this both examples. So method 1 is planned cost versus actual cost. Okay, so total planned cost of project, it's equal to 1000 USD. So at the end of M1, 800, or I think 80, yes, 80 USD has been already incurred. Actual cost at the end of month 1 is 80 USD. So what will happen? Automatically system will divide this 80 by 1000, and it will realize that, okay, 8% work has been completed. Okay, so this is a method which is based on planned cost versus actual cost. There can be also method 2, which is based on time. So method 2, which is based on time. So planned time vis-a-vis actual time. Now this time normally should not be in terms of months, because if it is in the months, then obviously it will be divided into 12. So this time normally is based on hours. So total planned hours of the project, let's say, is 1000 man hours. Okay, and at the end of M1 you realized that 80 hours work has been already booked on this particular project. So based on that, system will determine that yes, 8% work has been completed. Okay, so in short, These calculations are based on result key, and this result key is assigned to the project definition in PS. So you create a project, you assign the result key. At the end of the month, you calculate how much percentage has been completed based on the method that you defined in the result key, and whatever calculation has been done here. Once project system has determined that 8% work has been completed, this 8% has to be transferred as a value to sales and distribution, based on which the revenue recognition will be performed in the normal revenue recognition functionality. Okay, so this percentage completion normally is integrated with project system. Okay, so I don't have any example to show you now in the existing functionality, but I will definitely show you this one in RAR. Okay, so in short, now I hope you understood what is the purpose of revenue recognition functionality. So whenever you are booking the revenue at the time of billing, you don't need any kind of revenue recognition tool to identify what will be the revenue for my period. Okay, but in the case when there is a difference, when you are booking the billing and your revenue recognition at different stages, okay, different time intervals, in that case you need a revenue recognition functionality. So one is this time-based revenue, which means you divide the entire contract period into multiple accounting periods and book the revenue. Second is you divide the contract into percentage completion, which means you define based on the percentage completion you are going to book the revenue. Okay, billing again, if you are doing the billing first and then the revenue, then that amount of revenue will be booked under deferred revenue account. If you are booking the revenue before billing, then that amount will not go to the customer account till the time you are not creating the billing. It will lie in unbilled receivable account. Okay, just one more thing in the configuration. I think I have not told this till now. I already shown you where the deferred revenue account is set up. So I'll go to IMG again, sales and distribution, same folder that we seen, basic functions, account assignment and costing, revenue recognition, and this one we already seen. So which item category is relevant for revenue recognition? So if we go for WVN, we know that this is relevant for revenue recognition functionality. Okay, so this is a place where we specify it. If you go with the standard items, which we normally use in any sales order, like 10, which is a normal standard item category, you can see it is a standard item. You will not find revenue recognition at all. This means the revenue and billing are done at the same time. There is no time difference between revenue recognition and creation of billing document. Okay, so if you go back once again and let's talk about these two things. Maintain account determination. So there are two steps here. As I told you, in this entire scenario, we seen there are two important accounts, deferred revenue account and unbilled receivable account. If you have question in the mind, what about these accounts? Where exactly the customer account will come into the picture, where exactly this customer account is maintained, and where exactly this revenue account is maintained. So customer account always comes from the customer master data. There is no separate configuration to define the customer account. The GL account, which will be booked at the time of billing, this GL account will get picked from customer master. In the customer master, under financial role, there is a field called as reconciliation account. So that reconciliation account will be picked automatically. There is no configuration to determine this customer account. So let's talk about these three accounts now. Where exactly this revenue account will come into the picture, how the deferred revenue will be determined, and finally how this unbilled receivable account is determined. So all these three things are determined or can be determined using these two options. So let's go for the first one. Assign GL accounts. Yes.
Yeah, sorry, Gaurav. Can you please give example of scenario 5, because I may not be able to figure out the difference between SD, how revenue is recognized in SD and uh, RAR. So it will be great if you can please give
Yeah.
some
I'll
example
make
of
sure.
scenario 5. Yeah.
Sure. I'll do that.
Yeah.
Okay. So now, once we are here in this one, you can determine this is VKOA. If you are already coming from SD or FI background, you must be knowing this transaction VKOA, which is the integration of SD with FI, which means whenever you book any transaction, whenever you are creating the billing document in sales and distribution, system automatically generates the accounting entry, customer account debit. As I told you, customer account debit will come from the reconciliation account maintained in the master data of the customer to a revenue account. And this revenue account is maintained in this configuration. Okay, so you can determine the revenue account based on multiple combinations. So you can go with the first combination where you will say, okay, if the customer group is this, material group is this, account key is this, then I want this particular revenue account. In the second one, you will say, okay, I don't need to worry about material group. I can just check these two things, customer account group and account key, accordingly select the revenue account. Third one, you are not worried about what is the customer group. You are just worried about material group and account key. Okay, so what system does is it will follow this particular sequence. It will go in this configuration first. It will check if these two accounts are provided or not. If they are provided, then it will stop here itself. It will determine the GL account. If not, it will go to the next combination. If not, it will go to the third. If not, it will go to the fourth. And finally, if nothing is available here, it will go here. And even if it is not available here, then definitely system will throw error that revenue account has not been maintained for this combination, for this particular material, right? So any transaction or any sequence, when you double click on any particular activity here, it will ask you for two accounts, GL account and provision account. This GL account is a revenue account and this provision account is deferred revenue account. Okay, so for example, in our combination, let me click on position. See, application will be always V. Let's see what is V. Sorry, I was looking for description, but it is not available. Okay, so let's go with V. Condition type is always going to be KOFI. Chart of accounts, it depends upon your enterprise structure. So if I go for OBY6, OBY6 is a transaction for global parameters of company code. So our company code that we are continuously using is 3000. You can see this company code 3000 is assigned to chart of account CAUS. So here we have to specify application V, condition type KOFI, chart of account CAUS. Sales organization is 3000. Okay, and if you want to provide this account assignment group, material account group, account key, then it will come. But normally for revenue, the account key is ERL. So if you see this ERL, what is happening? Revenue account can be determined from here itself, but deferred revenue account is not defined here for ERL. Okay, these are different account keys based on your different conditions. The normal revenue is booked in ERL. So what is happening is normal revenue account combination is maintained here, but if we talk about the deferred revenue account, that is not maintained here. So in that case, whenever a system is looking for revenue account, it will pick it from here. It will not go to the next combination. But if it is looking for deferred revenue account, definitely in this line, it will not be able to identify, and that is the reason it has to go for the next combination. So again, in the next combination, he will enter the same things. Only thing is there will be one lesser field here. There will not be any material group. So V, Kofi, chart of account CAUS, sales organization 3000. And here also, system is not able to determine the deferred revenue account. So revenue account is available, but there is no deferred revenue account. Again, it will go for the next combination. So again, this V, chart of account CAUS, and this 3000. So again, for ERL, no deferred revenue account. Go to the next combination. Here also there is no deferred revenue account. And the last one is this one. So if there is no revenue account defined here, if you try to create a new document, it is definitely going to give you the error. Okay, but here you can see this is the deferred revenue account which is already defined. Okay, so if I remove this, definitely system will not be able to understand what will be the deferred account. Okay, so what you understood in this configuration is from where the revenue account will come into the picture, from where the deferred revenue account will come into the picture. So customer, you already understood, customer is coming from the customer master data. Now only the remaining GL account that will be required in case of revenue recognition is unbilled receivables, and that is not defined here. Unbilled receivables you cannot define using this first option. There is a second activity, assign accounts for unbilled receivables and cost. So if you double click on this, this is where you are going to determine the revenue account. So you can see there are not much of combinations here. So application is V, chart of account is CAUS. This is the unbilled receivable account, and it is coming based on the reconciliation account. What is the reconciliation account? Reconciliation account is nothing but customer account. Okay, as I told you, in customer master, there is a GL account assigned. So if I talk about this particular customer, which is mentioned in this particular contract, okay, this is the sold to party. Okay, let me go for XT or FD03 for 3800 and company code 3000. Okay, if I go to company code information, this is the reconciliation account. Okay, so what we are telling the system is if the reconciliation account is this, then instead of booking the amount here, book in unbilled receivables till the time billing is not completed. Okay, so this is the place from where the fourth GL account is coming into the picture. Okay, now I hope whatever scenarios we have seen till now, apart from this PS scenario, all the scenarios which are coming from SD perspective, you know where exactly the configuration is maintained. How system is determining the item category of a particular item, how based on the item category system is determining whether it is relevant to the periodic based billing or there is a billing plan or not. All those things are coming from there. And finally, whenever you are trying to post the documents, either the billing document or the revenue account document, how system is determining the GL accounts. Clear on this? Now let me once again, as Rohit said he wants some more clarification on this. So see, currently all other scenarios I've shown you in the system, and that is the reason I think you are more comfortable. This scenario is not present in the system, and it is also not very straightforward to create this scenario, because I need to first create the PS structure, I need to create some project, and accordingly I need to generate the uh, cost for this percentage completion. I need to execute the settlement, which means whatever amount will be determined here, it will go back and hit into the SD module. Okay, so again, I will just explain you what exactly is the purpose of this, but you will get a clearer picture when we will see this particular scenario practically in SAP RAR. Okay, but if your question is how this is different in SAP RAR, I will try to clarify that now. Okay, so just quick recap in 5 minutes. What is this fifth scenario? See, in the fifth scenario, we are saying normally, whenever you are creating the billing and your revenue recognition, if they are not, if there is no time difference between them, then there is no question of having the separate billing document and revenue recognition. At the same time, whenever you create a billing document, revenue is booked. Okay, but in the scenarios when it is not true, because you are booking the revenue in advance, or you are you are creating the billing document in advance for multiple months, or your revenue recognition is monthly, but you are creating the billing document at the end of quarter or at the end of year. In that case, these two activities have to be carried out separately. Okay, so the first option is, if you are carrying out these activities separately, you divide the entire contract amount into equal number of installments. So if you have 12 installments, you will divide it by 12. If you have 4 installments, you will divide it by 4. Okay, so that will be the calculated amount. That will be the amount which is getting divided by the contract term. But if it is service based, which means your revenue is not dependent on how many months you completed. Your revenue is dependent on how much work you have completed. Okay, so in that case, how will you track the work? How much work you completed? There needs to be some mechanism in the system where this work is being calculated. And normally, in order to calculate this kind of work, we use PS system, project systems. Okay, in the project system, as soon as the sales order is created, we will also create a corresponding project. Okay, and we will set up the system in such a way that whenever we are doing any particular activity, telling the SD what has been completed till now. Okay, so what will happen, in order to set up those in the project system, we need to maintain a lot of configurations, the RA keys and all. And based on the RA keys, we can define whether we want to implement method 1 or method 2. Based on that, system will estimate or determine what is the total percentage completed for a particular project. Accordingly, it will send the data back to SD, and based on that, revenue recognition functionality will determine this as percentage complete, and it will recognize that particular revenue. If the billing is already completed, it will go for revenue to deferred revenue account. If the billing is not completed, it will go from revenue to unbilled receivable account based on the combination that we just maintained. Okay, now if your question is how this is different in RAR, no need to worry at this point of time, because even we have not discussed how these transactions are different in RAR. So my focus currently is to make you understand what are the different kind of scenarios that you execute during the revenue recognition, how the scenarios were handled in SAP SD revenue recognition. Once you understand that, my next thing which I'm going to start now, we have some time now, 10-15 minutes. So I will start with giving you the scenarios where you will understand that yes, these kind of scenarios cannot be configured or achieved using SD revenue recognition, and then tomorrow I will give you the complete description of how these things will be handled in SAP RAR. So tomorrow will be just kind of overview to SAP RAR without going into much of practicals. We will try to understand what needs to be done, what are the different steps to recognize the revenue, and then for each and every step, we need to understand what configuration will be used, what master data will be used, and what transactions will be used. Okay, Rohit, so is this sufficient for this particular scenario now, percentage completion?
Yeah, thanks, Gaurav. Thank you.
Okay, so any questions in understanding of whatever we have discussed till now, so that I can go to the next part now. Okay, if not, let me go to the next thing. Now I'll give you one or two scenarios and you need to tell me what do you think how this will be handled in revenue recognition. Okay, so these are practical scenarios now, industry specific scenarios. Okay, so let's take the telecommunication industry. Okay, transaction number 1. Company sells mobile device at $5,000. Can you tell me the revenue treatment of this?
This will be
Whether this revenue will be
this will be upfront revenue recognition of $5,000.
so you mean to say scenario number, if I talk from this scenario,